Hey folks, this is Dinesh Logeswaran, your investments and insurance advisor. All right, in this video, we're going to cover life insurance. Life insurance is one of those topics that can be very sensitive, but you need to understand why you need life insurance, right? Especially if you're a breadwinner watching this video and if you have dependents that count on you. What are the different types of life insurance? Why should I even consider them? That's what we're going to cover in this video. All right, let's talk about the two life insurances that you should be considering. There's temporary life insurance and permanent life insurance. What is temporary life insurance? Well, it's to cover you for temporary needs. It's to cover you for a period of time. And it's the most affordable way to buy life insurance. For instance, let's talk about having liabilities, right? Let's say if you had line of credits, credit cards, mortgage liabilities, these are all temporary debt. You're eventually going to pay it off. But while you're paying it off, you want to make sure that you have life insurance, right? And you want to make sure that in case of premature death, that your loved ones, whether it's your spouse, your kids, your parents, are not stuck with all this debt. And you want to make sure the protection's in place. Whether it's 10 years, 20 years, 30 years, does not matter. At the end of that period, however, you want to make sure your liabilities are all paid off and you're self-insured, because while you were protected, you're also accumulating savings and assets. So that's why you would want to consider temporary life insurance. Another reason that you would want to consider temporary life insurance is for income replacement, right? You watching this today can be a main breadwinner. What would happen to your family household if you don't walk into home tomorrow? Right? How would it impact your spouse, your kids, your parents, right? You want to make sure that you have enough insurance to cover you for a period of time. For instance, let's say if you were making $100,000 a year, a rule of thumb to calculate this is maybe you'd want 10 years of your income to be replaced. If you're no longer there tomorrow, at least for the next 10 years, which will be 10 times 100,000, $1 million will be payable to your family who are dependent on you so that they can grieve peacefully and not worry about the finances. Something to really consider. Let's move on to permanent life insurance. As the word says it, it's for permanent life insurance needs. What are some of your permanent life insurance needs? It can be final expenses such as funeral costs, estate planning for tax liabilities, or maybe it's because you want to leave a legacy, leave some money behind tax-free to your family. We'll get into more details. So what are the three different types of life insurance products you would want to consider for your permanent life insurance needs? Well, number one, you can go with the most affordable type, which is called a Term 100. All it is a fixed and guaranteed premium that protects you all the way till age 100. There's no renewal, there's no expiry, simply life insurance that protects your permanent needs. Another option, the one that's more common today, is called a whole life insurance. The whole life insurance has a cash value component, and I think more and more Canadians are appreciating this concept. However, you would want to make sure that you are suitable for this. There's two types. There's a whole life participating policy and a whole life non-participating policy. What's the difference? Well, the participating policy offers you an annual dividend. You participate in the insurance company's profit. So this money accumulates in a cash value account and it compounds, grows tax deferred, and it could also be potentially accessible tax-free. On the flip side, you have the non-participating whole life, and it simply means you don't participate in the insurance company's profit, so there's no annual dividends. The third and most complex insurance or permanent life insurance, I would say, is the universal life insurance. It's market linked. It has an insurance component and an investment component that's very obvious. And the investment component, you're allowed to choose which type of fund you want to go into. And it all depends on your investment experience. And if you're a risk taker, if you're a medium risk taker or no risk taker, you would want to consider the type of fund. And that will determine also the type of growth that you'll accumulate. All of these types of permanent life insurance can make sense. It depends on your situation. You want to get more details on this and look out for more details on the next video. I hope this video made a lot of sense. I hope now you can make a better informed decision for yourself when it comes to buying your life insurance policy. Please leave your comment below or ask any questions that might be in your mind today. I hope I can answer those questions for you or create a video that can help you understand that better. This is Dinesh Logeswaran, your insurance and investment advisor, signing off. See you on the next video.